Ever glance at a crypto chart with its dizzying peaks and valleys and feel a strange sense of déjà vu? That feeling like you've seen this exact scenario play out before? A new coin suddenly skyrockets, capturing everyone's attention, dominating headlines, and the whole phenomenon just seems eerily familiar. This isn't just your imagination playing tricks on you. Crypto markets, despite their cutting-edge technology, often run on repeat cycles. History tends to rhyme, as they say. One day, a particular coin is hailed as the future of finance. The next, it's crashing down to earth, leaving investors reeling. Then, almost predictably, a new cycle begins, a fresh narrative emerges, and the whole story repeats itself with a different cast of characters. But it's not entirely random chaos. Beneath the surface volatility, there are hidden patterns, almost like a secret script guiding the market's movements. Remember the Dogecoin craze of 2021, the meme coin that captured the world's attention? Then, not long after, came Shiba Inu. Same viral hype, same speculative frenzy, and ultimately, the same inevitable cooldown. These recurring cycles aren't just a series of coincidences. They're fundamentally driven by underlying factors like technology advancements, the collective psychology of investors, and the pervasive influence of market hype amplified through social media channels. It's a predictable recipe: new and exciting tech, a surge of social media buzz and influencer endorsements, the fear of missing out, FOMO, gripping the masses, and suddenly, you have a full-blown bull run on your hands. The specific coins and the narrative surrounding them may change and evolve, but the underlying pattern of boom and bust stays remarkably consistent. Recognizing and spotting these recurring patterns is the crucial difference between making calculated, smart investment moves and simply gambling your money away. When you observe a coin or token following a familiar historical path, you can begin to anticipate what potential outcomes might lie ahead. It's not necessarily about making perfect, guaranteed predictions. It's more about making better, more informed guesses based on historical precedent. In the world of crypto, a well-informed guess, backed by pattern recognition, is an incredibly powerful tool to have in your arsenal. So, let's delve deeper and dig into the specific patterns and market cycles that ultimately drive this wild, unpredictable, and often lucrative market. What if I told you there's a recurring event, almost like a built-in trigger, that historically ignites bull runs in the crypto market? One of crypto's most powerful patterns? The Bitcoin halving. It's a phenomenon that seasoned crypto investors keep a close eye on. Every 4 years, Bitcoin's mining reward is cut in half, slashing the rate at which new Bitcoin enters circulation, effectively reducing the new supply. This is hard-coded into Bitcoin's DNA. Imagine if oil production was suddenly halved. Overnight, the amount of oil available decreases dramatically. Prices would likely soar due to scarcity. That's supply and demand in its purest form, and it's played out in crypto again and again, specifically around these halving events. The reduced supply, coupled with consistent or increasing demand, creates upward price pressure. After each halving, 2012, 2016, 2020, Bitcoin's price exploded within a year or so. This isn't just a coincidence, it's a pattern that many believe will continue. The pattern halving happens, supply tightens as fewer new coins are created, and a new peak follows, driven by increased scarcity and demand. But it's not just Bitcoin that feels the effects. The halving triggers a ripple effect, a chain reaction across the entire crypto market. As Bitcoin climbs, fueled by the reduced supply, it grabs headlines, attracts media attention, and draws in new money from both retail and institutional investors. Investors then look for the next Bitcoin, seeking out undervalued projects with high potential, and money flows into altcoins, driving up their prices as well. The next halving is coming soon, marked on every crypto enthusiast's calendar, and if history rhymes, another cycle of price appreciation could be on the way. Of course, nothing's guaranteed in the world of crypto, and past performance is never a guarantee of future results, but the halving is arguably crypto's most reliable and predictable catalyst. It's a 4-year clock, a recurring event that the whole market watches with anticipation, wondering if history will repeat itself. This pattern, driven by the halving, has defined crypto's rhythm, its boom and bust cycles for over a decade, shaping the market we know today. When Bitcoin surges, a second pattern emerges, the altcoin echo. Bitcoin leads, drawing in big money and attention. Then, as its price climbs, investors chase bigger gains in altcoins. First, money flows to large coins like Ethereum, then to smaller, riskier coins, sometimes meme coins. This rotation creates altcoin season, where some coins skyrocket. We saw it in 2021. Bitcoin broke records, then Ethereum, then DeFi, NFTs, and meme coins exploded. It's a predictable progression from safety to speculation, driven by the search for exponential gains. Understanding this rotation helps you spot where the market's attention, and money, might go next. Think crypto's boom and bust cycles are unique? Look at the dot-com bubble of the late 90s. Back then, any company with .com in its name soared, even without real business. Investors chased hype, convinced the internet would change everything. Sound familiar? Crypto follows the same script. For every Amazon or Google, there were hundreds of failures, just like Bitcoin and Ethereum versus thousands of dead coins. The crash was brutal. The Nasdaq lost 80%, and people lost fortunes. Sentiment flipped from euphoria to despair, just like crypto winters. But the core technology survived, and the winners became giants. Markets always get ahead of themselves with new tech, then crash, then rebuild. The bet in crypto blockchain survivors could be tomorrow's titans. History doesn't repeat, but it sure does rhyme. Why do these cycles repeat? It's not about tech, it's about human psychology. Fear and greed drive every market, and crypto is no exception. The Wall Street cheat sheet maps it perfectly. Disbelief, hope, thrill, euphoria, then anxiety, fear, panic, and depression. At the top, greed takes over. At the bottom, fear rules. News and social media amplify these emotions, fueling FOMO in bull runs and FUD in bear markets. Most people follow the herd, whether it's running up or off a cliff. Recognizing these emotional waves is key to surviving the cycle. The market's wild swings are really just a mirror of our own psychology. Master your emotions and you'll navigate crypto far better. Now that you're equipped with the knowledge of these patterns, the halving cycle, a fundamental driver of scarcity, the altcoin echo, where smaller coins often mirror Bitcoin's moves with amplified volatility, the tech bubble rhyme, a stark reminder of speculative excess, and the emotional roller coaster, driven by fear and greed. Suddenly, the chaos starts to make sense, revealing underlying structures. The primary goal isn't to predict exact prices with certainty, an impossible task, but rather to recognize where we are situated within the broader market cycle. Watch closely for significant Bitcoin rallies, the bellwether of the crypto market, capital rotation between different sectors, and the ever-shifting narratives that dominate the headlines. The rise and fall of ICOs and DeFi protocols, the NFT craze, and the emergence of AI coins. When everyone, including your grandma, is suddenly talking about a new meme coin, it might just be a telltale sign that we're nearing a market top. Diligently track which stories and events are driving these smaller mini-cycles within the overarching trend. Strive to be a perpetual student of the market, but equally important, be a student of your own emotional responses. Meticulously keep a journal, documenting your feelings during both the exhilarating booms and the devastating busts. In time, you'll inevitably begin to see the patterns reflected in yourself. Recognizing and spotting these recurring cycles is the crucial first step towards navigating the often turbulent waters of crypto with greater wisdom and foresight. Remember, the patterns are all around us, everywhere you look, if you simply train yourself to know how and where to look for them.